Stock market weekly chart review for the week of December 26th through December 30th, 2023. This will be a bit of a unique weekly chart review video for two reasons. First reason, it's the end of the month. Second reason, it's the end of the year. So let's try to make this a New Year's celebration, right? New Year's Eve, putting this together. Before we start looking at weekly, monthly, maybe even an annual chart, before we do that, let me remind you that this is being brought to you by I Have Success. The mission of I Have Success is to help you begin your trading journey by learning how to sell cash secured put options in a way that allows myself, that's me, to grow and improve in the process. Maybe you're already doing something more than selling cash secured put options. If so, pass this on to a friend or family member as a New Year's gift. Because, ladies and gentlemen, I believe that if you have an internet connection, a bank account, and you spend money at least once a year, you have no legitimate reason in 2022, going into 2023, by the time you're watching this, no legitimate reason not to be selling cash secured put options. Prices of things are only going to keep going up. They might dip down for a little while, but they're going to go back up. So, in the description of this video, we'll give you links to different things that you can use to begin that journey. Link to the website, link to playlist, right up here. There's get ready. Here it comes. Boom, 2-minute mark. Bam. See that link to a playlist that popped up? That will be the new playlist that I'm developing for paper trades. If you don't know what paper trades are, watch videos in that playlist, read the description of that playlist, get yourself comfortable with paper trading, test things out. Now, let's get into these markets. We're looking at what we normally look at, the overall general markets in the US, with one difference. Instead of looking at a one-day candle, 1 month of data, we're looking at a 1-week candle with 6 months of data. We're looking at a bigger picture. Now, the one thing that is similar is the time frame of this moving average is meant to mimic the 200-day. It's not exact. It's at a 40 period, which is fairly close to 200 days. So the dollar, we see overall in the last 6 months, the dollar went up for a little while, but in the last maybe 3 of those 6 months, it's just been moving down. Broke below that 200-day moving average, and we see this last weekly candle really hit the low of the 6-month time frame. When the dollar moves down, generally things that you would buy with dollars would move up. Why is that? Because it takes more dollars to purchase the same item, because the value of the dollar is down. So going into 2023, let's continue to monitor that dollar. Okay, but we see that 200-day representing the 200-day moving average. I'm just going to call it a 200-day moving average. I get it. You engineers, you can blow up the comments. Oh, it's not a 200-day moving average. It's a 40 period. Blah, 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 blah. Okay. It's creative license. I'm invoking the creative license of making this video. So we see it below that 200-day moving average, upsloping 200-day. Now this one, we see a steep downward slope in that 200-day moving average with price action below that, and overall over the last 6 months moving down. It did rally up here a little bit, kind of got close to that average, and then drop down. Gold contracts, we see over above a downward sloping 200-day. We see the majority in the last 6 months, the majority of the price action was below, but a little bit over a month ago, maybe a month and a week ago, it's like boom, broke above that, testing right here. Woo, tested lower. Look at this. You see how it's just kind of been moving up. So it would appear if it continues to do that, it would appear that that it's going to stay above that 200-day moving average. If it stays above that 200-day moving average, it's probably going to be building here. But it could go like that. No, it couldn't. It couldn't just gravitate over here into crude oil. Look at crude oil is below a 200-day moving average that was kind of going up, started going flat, now it's going down. We see it just drop down, rallied up a little bit, drop down. Overall, price has been down in the last 6 months with that low of 70. Bitcoin, that's a pretty steep. That's even steeper than TLT. I think, yeah, I would say that's a steeper decline. And we see Bitcoin for quite some time. It just does this kind of rallies up a little bit, drops down, goes sideways to rally up, drop down, sideways to rally up, drop down, sideways, rally up, drop down, and it's kind of continuing to do that same thing. The VIX, overall, VIX in the last 6 months started the month off, closed here, lower. We'll have to wait and see what happens. VIX shot up a little bit, but overall, it's coming down, shot up, opened up here, test that 200-day moving average, and drop down. Which way is it going to go? We will see, and we should have a little bit of an indication by looking at the last 4 here. These are the 4 major indices of the U.S. stock market. We have SPX below a downward sloping 200-day moving average. We see it tested twice, let's say. I know, okay, you could say, well, no, it really tested 4 times, or is that 3 times? But anyways, we'll count that as 2. We'll count this as 1. Failed on both times. Now it's close to doing these doji type things. Doji meaning open and closing in the same spot. That's a true doji right here. Open, closing, the exact same spot. These ones not exactly the same spot. I don't see, ooh, getting caught, getting some, seems to be taking some support here at that 3,800 area. Dow Jones, downward sloping 200-day moving average, but above. It is above the 200-day moving average. It floated back down here. Didn't really come down and test it. It seems to be catching support right on the upside of this. Bottom side here seems to be the upside of there. Looking to the left, maybe it's right in this area. I'm not particularly. Maybe we're getting a W. I don't know. Maybe could that be constituted as a W? Possibly. I mean, we'll see if it shoots up. Could be. If it's an M, we stretch out a little more here. M. The problem with yeah, I mean, possibly it could be that problem. Anyways, we'll see. We got this is putting pressure down on stocks. This is also, you can see, putting pressure down on stocks. There you got it. If it breaks through here, it's probably really going to go, but it's not much action on that candle. Last week of the stock market, what do you expect? And Russell 2000, same thing. So you can see what it's like. It's sloped to the downside, so I don't see how this is really going to shoot up unless you start doing some sort of quantitative easing type of thing. And let's change this into monthly. End of the month, end of the year. So same things, but looking on a monthly chart with 3 years of data. We see overall the dollar in the last 3 years has been up. So right now, has the dollar broken the uptrend? Where's the last? Well, here's a pivot here. Could we potentially count this as a pivot? I don't know. Where's the last pivot? Down here. Looking at this, Oh, hard for me to say. Maybe there's someone else with some better technical analysis. If you look at it objectively, you could say yes or no. Excuse me. If you look at it subjectively, you could. There's room for debate on either side, right? Yes and no. If you have some objective way to measure it, it's going to be a black and white. But I'm not. I don't fall into either of those camps at the moment of having a completely objective way, or so I guess I just by default fall in the subjective. So yeah, if I have to go with one side, I'll say broke the present uptrend due to being below the 200-day moving average, and I'd give myself the leniency to change that opinion at any time in the future. TLT, we see it's just been down over the last 3 years. It's been down below that 200-day moving average. It made a valiant effort to come up on this month right here, and it was basically, as a mastertrader.com would say, a green bar ignored right there. Gold contracts. We see those gold contracts over the last 3 years up. It's been a rocky ride. Definitely had some sideways, and our moving average, which this one is also this is on a 10 period, meant to mimic the 200-day or relatively close to it. You see prices here, like they were over here. It's kind of been moving sideways for a while. And oil overall, you see over the last 3 years it had been up. It pulled back. Here we got a pivot point here, potentially a pivot point dropping down here. Here's that low point. So with this one, I would say, even though it's below the 200-day moving average, since it hasn't come down here and test this low, what is that? 60 some. You know, per just a quick look at this, I would say it's still potentially in an uptrend. If it doesn't drop lower and start testing this, it could potentially go back higher. Not necessarily easy under this 200-day moving average, but this is something of significance to look out for. Just like here, right? Dropping down this part, it was like the prices got low enough and buyers stepped up and it really came in. This one and gold and the dollar and treasuries, all those, there's a lot of politics involved in those versus, there's a lot less politics involved in, let's say, whoever makes Arm & Hammer baking soda. Not a lot of politics involved in baking soda or toilet paper or underwear, stuff like that. The dollar, gold, oil, that's political. If you don't think so, ask Gaddafi what happened when he tried to sell oil in something other than US dollars. And, maybe you might see a case for it being a bit political. Bitcoin over the last 3 years up, right? Here we were down here in these lows of 4210, and we're at 16,000-ish. So on the last 3 years up. Bull trend though. Let's see. Here's our pivot point. Here's a pivot point. It broke this. It broke this support. So now it basically becomes resistance, and yeah, you have to figure out what you want to do with that. VIX. We see that VIX. I don't know if it's worth looking at a monthly chart from the VIX, because the VIX is a derivative of SPX, and it's basically kind of known as a fear indicator, fear meter. It's a volatility index, and maybe we just look at this and kind of get an idea of what the VIX has been doing. So our last 4 indices of the stock market. Look at this. We see these monthly candles, right? This one, at least this one's in a little bit different position, but these other ones, that's kind of a mixture. A little different position, meaning being like up. These ones are flat through here, flat to down through here. Definitely flat. I guess that's a little bit down. This is a little up. But yeah, you know, we're below the 200-day moving averages on three out of 4, and on a monthly we looks like we came down and tested that, pulled back just a little bit to it. Let's look at these. Oh, I think I set up the 12 sectors of the stock market on the, guess we'll just be stuck with 11 instead of 12 on the weekly. So I want to blow through this a bit faster so we can get on to something a bit more exciting. So we see weekly in the technology sector on this weekly chart, right? 6 months of data, each candle being 1 week, and going to come down. It looks like we're slowing down to test this 120, but since it's below the 200-day moving average, let's say there's a good chance we might be testing this 200-day, this 120 area. Somewhere in this area you see was a pivot going back up. So this area is pretty significant, where when prices got into this area before, buyers stepped up. So let's see what happens when how low is it going to go into this 120 area, and what's going to happen when it gets into there. If it starts just like breaking, if it really just breaks this low, then whew, we probably got more to the downside. Healthcare has been one of the stronger sectors, and you know, just a quick, I glanced at everything real quickly, like if you watch the daily chart review videos, we're doing a quick look at the moving averages, price action in relationship to the moving averages. So I noticed, look at this, one moving average, we got the energy sector above an upsloping moving average, right? Still, you can see still in a bull trend. Basically, that's what it's looking like to me. Whether here's a big pivot area right here, and we're not even close to that strong uptrend on that 200-day moving average. Below a strong downward sloping uptrend. Right above a strong downward sloping 200-day moving average. Above a downward sloping 200-day moving average. Below 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 a very strong downward slope. That one's even stronger than Bitcoin. That is saying something. And then we got some sideways. Sideways. So I think on the dailies we had 2. I think we had 2 out of 12. We're missing that communication sector in this. But when looking at the weekly, you know, we got 1, 2, 3, 4, 5, 6, 7. Yeah, 7 out of 11 here. Oh, how about that? 7 out of 11. Let's look at the monthly. Monthly. What are we seeing? All right. Everybody had been moving up. But kind of rotating down. Besides energy. Look at that. Monthly, 3-year. Energy's still looking pretty strong, with a lot of consolidation right in here. Right at this 80. It dipped down into this down here in like 75 or something like that. You can see this candle that's highlighted. Got all the way down here. Maybe about $5 below 80. So in this area from 80 to maybe 70, somewhere in there, there's a lot of I could see how prices could just get really stuck inside of there. Anything looking extremely bullish, because everything besides this, like, okay, that looks bullish. Besides that, okay, this is consumer staples, and I wouldn't say, I mean, it definitely doesn't look as bullish as this, but maybe utilities, maybe. Everything else kind of looks like it struggling to to go back to the upside. Let's see if we can look at some, just for fun, look at some annual chart. Annual, yeah, let me, hold on, I'll be right back. Okie dokie. We're looking at SPX. This chart over here, each candle is 1 year with the maximum time frame that we have. Looks like maybe going back into the, is that 1930s? Yeah, I guess maybe. I don't know. Yeah, 1940s. Let's see it right there. This is quarterly. So the last 20 years of data, each candle being 1 quarter, 4 quarters in 1 year. So what do we see? We see, well, okay, here's some stuff that sticks out to me. Double top here, right? Pulls back. What time frame was this? Ooh, 2008. How about that? Do some research in what happened in 2008. In here, 2000. Maybe that was the internet bubble. Maybe this was the internet bubble right here, and then bursting of the internet bubble. What happened? What was able to drive prices back up here that basically got to here? I'm not sure. And then subprime mortgage housing crash that wasn't financial, wasn't monetary. You can duke it out with the macro guys, but we see that hit this top right here again, boom, came down. And then quantitative easing, and then simulating the effects of quantitative easing, but calling it different names. And look at this, amazing. 1 year there's a bit of a pullback, 1 year there's a bit of a pullback. Then we had some health crisis happening. Maybe that was right around in here. Ooh, yeah, maybe that was the health crisis. Then, boom, stimulate the market. Boom, stimulate the market. This must have been 2021. And here is 2022. But, you know, on a year-over-year basis, we're up. Look at that. Where would be, if something is going to pull back? So on a quarterly chart, we see this last quarter has been green, but it hasn't gotten back to this top over here. And just by looking, where is, when you look here, going down, or you could say looking to the left, however you want to word it, where do you see prices start consolidating, get clumpy? Right in here. Right between this 2,500 to 3,000. 2,500 to 3,000, right in there. So if the market continues to crash, right, 3,500, we see it touch there, but buying pressure pushed it back up. But if it breaks through that, we're probably going to be somewhere in here. Maybe even somewhere in this range, right there. So that's SPX. Let's take a look at the Dow Jones. Max data. Hey, it's not too much max data here. Only going back to 2007. What's up, Thinkorswim? And hard to, what can we extrapolate from this? Look at that. That price is sold off, came back up. And we're only look at this. We're still in the, like, basically 50% of here. These are maybe those big chip, blue chip stocks or whatever doing well. McDonald's, Johnson & Johnson, I think, stuff like that. You can check them out. But here you can see here price is kind of getting clumping. So if it continues to sell off, don't be surprised if you see somewhere in this range, or maybe somewhere in this range even more. Looking on that quarterly chart, we got a bit more data. We can really see some stuff in here. Looks like we might be getting a pivot. We'll have to see what happens right next year into there. NASDAQ. Going back to 19 something, the low is in the ways, and I guess it's got to be the 1980s. In a way similar to the S&P 500, but we only have one little top right there, and not seeing as much. It's been pretty clean, actually, like real clean on the upside. Probably would have been more exciting if I would have studied these charts before I made this, but whatever, you know. If you go, we'll go back to the mission over here. It's the allows me to grow and improve myself, right? You know, so if it's not entertaining or educational for you, at least it's good for me. You know, you know what I'm saying. You know what I'm saying. Hope it was as good for you as it was for me, but at least it's good for me. Oh, look at this pull back. What is this? Russell 2000, and a lot of price consolidation. Did I call the NASDAQ the Russell 2000? I don't know. With that, my friends, I hope you kind of like this experience. I'm embarrassed now. I'm embarrassed over here. So I'm gonna call this quits. And I will leave you, if you made it this far, I'm gonna leave you with a present, and it's gonna be popping up right there at the 26 minutes and whatever 33 seconds that was, somewhere in there. Even if that's where it's gonna be 26. Let me write that down. 26:33. That's where it's going to be. You're going to have a video there that hopefully will help you out. It's the new year, right? This is going to be posted on the 1st of the year. It is the new year. Here are some things that I'm going to suggest that you, if you haven't already, that you put into action this year, 2023. Number one, realize that people's opinions outside of yours may have conflicts of interest with your interest. No one understands your interest as well as you understand your interest. So when you are considering taking financial advice or doing anything with your finances, all these type of things, at the minimum, have faith that you can develop the ability to make wise decisions for yourself. And it is in your best interest to develop the ability to make wise decisions for yourself. So that way you do not have to rely on the suspect opinion of other people. You do not know what these other people's motives are, including me. Don't take my word or anyone else's word as fact. Learn how to come to conclusions on your own so you can test what people are telling you and see if it makes sense in the overall big picture and smaller aspects of your life. One way that I think is a great way to start your ability to do that is by learning how to sell cash secured put options on stocks that you don't mind owning. Because if you do not know how to do that at the moment, the learning curve will be relatively steep, but once you learn how to do it, it will be more difficult for someone to trick you financially, or maybe even not financially. Your education of the world and of the financial system, which is not of Mother Nature, but it is part of what's running human society. Your sophistication will drastically increase when you're doing all the things to be in a position where you understand and you can proficiently sell cash secured put options on stocks that you don't mind owning. Right? I Have Success is not about giving you stock tips. It's not about giving you recommendations. It's about helping you learn how to think for yourself. And I think the greatest thing that you can do is learn how to sell cash secured put options and start positioning yourself to be independent of needing other people's opinions to make suitable decisions for yourself. With that, Happy New Year. Aloha.